Everyone, welcome back to the Market Chat. My name is Richard. Joining me today is Trade Sniper Sara from Twitter, and she is a member of #TheStrat community. So it's great to get some new voices on here and learn how different people view technical analysis. Sara, thanks so much for being here, and welcome to the show.
Thank you for having me, Richard. I'm excited to be here. Talk about the Strat.
Absolutely. I always like to hear about people's background and how they got into the stock market in general and how you learned about the Strat. So can you tell me a little bit about your journey and how you discovered this method and basically became a trader as well?
Sure. Probably like a lot of people back in 2017 when Bitcoin was going insane and everybody was talking about it. My brother first told me about it and said I should, buy some and just hold it. And I said, okay, I will. So waking up every morning, you would just wake up to gains. You didn't have to do anything.
Right.
I had already started learning a little bit about technical analysis. I can't even tell you what piqued my interest. Just something about the charts and trading and being able to make my own money. It was all very intriguing to me.
Yeah.
So I started looking on YouTube, trying to find videos, tutorials, anything I could get my hands on really about technical analysis. Stumbled across a great community. The chart guys, Charting Man Dan, he posts videos every day. He's an excellent trader. He's been doing it for a long time. So I started kind of watching his videos. And at this time, I still had a job, like a real job, a retail job. But I just dove in and started learning. I was learning while I was at work. I had headphones in, well, at least one earbud to try and hide. But it was all I could do. I just wanted to absorb anything that I could. And Dan too was always reminding us, when stocks or crypto starts to go parabolic, be prepared, have stops in. Right. This can't go on like this forever. And that was right around the top. That was right around 20,000 a coin. And I had stops in. And then I watched my brother and my cousins and anyone else who had invested, all their gains got wiped out because they didn't take any profit.
Right. And how did you after that, how did you find the Strat and really learn that method and kind of move on from the more traditional technical analysis?
Okay, so I learned technical analysis for a good 2 years, and I still was struggling. I was struggling to take profit at the proper places. Something just wasn't clicking with me. So I did what I do, and I went back onto YouTube and started looking, for other traders, other ways. And I stumbled across Rob Smith, who teaches the Strat. And that really caught my attention too, because what he teaches is very similar to technical analysis because they're both completely price action based, but the Strat is a much more simplistic version of technical analysis. And the thing that I think I really vibed with was that it had clear targets. So it's like, enter here, sell here. Whereas in technical analysis, when I was learning, I didn't feel like I had a good grasp on that. So learning the Strat helped with that. And also too, learning about broadening formations, which has been a game changer for me. Most traders will say, the algos are picking me off and they're stop hunting, but really this happens all the time. And you just have to notice it, recognize it, and know what to do when it happens. So that was a big thing for me too, because when I was just doing technical analysis, we would call that a support. So I would say, oh, the support broke, I'm going to go short. And then we just go straight up. And I'm like, what am I doing wrong? So that's where the Strat helped me, was learning about broadening formations, which I will talk about more when we get into other things, but that's kind of how I found the strat. That was in 2019. So in February. So it's been a little over 2 years since I've been learning the strat and practicing it. And then I started to teach it. So, and that's helped a lot as well.
Absolutely. That's the best way to learn anything. You have to really know something to be able to teach it. And you have a great YouTube channel. I'll have that link down below for people if they want to check it out. But getting a little into what you're currently doing, are you currently a full-time day trader? Is that what you're doing?
I am. So when I was learning technical analysis with Dan, that had started before 2017, so probably somewhere in 2016. And then I ended up, so I worked at this local retail store. I was a manager. I had worked my way from like an entry-level cashier to managing the top store out of like 40 stores. And I was happy with where I was monetarily, but I was very unhappy with my job. So I started learning technical analysis, and that's when it consumed every thought in my head. And I was like, this is what I want to do. I want to be accountable for me and myself only, and not trying to motivate other people who don't want to be motivated. So in 2018, September, I decided to go full-time day trading, because at the time I was only 33, and I said, if I don't do this now, I'm going to regret it. So we're going to do it. We're going to, put everything that we have into it. If it doesn't work, I have to go and get another job. Big deal. So that's kind of how it started. So I've been full-time day trading since the end of 2018.
Very cool. And now I kind of want to get into what the strat really is, because a lot of people who watch this channel, they're more kind of classic can slim based. They're using moving averages. They have a little bit longer time frame than you, more swing trading, holding weeks to months. What, just simplistically, what is the strat, and what's the general kind of what are the general guidelines and tenets of that strategy?
Sure. Okay. Good question. So Rob Smith's methodology basically says that there's only 3 ways a candle can move from one candle to the next. So what those are, and it's very, like I said, it's very simplistic. So Rob has labeled them as 1, 2, and 3. So what a 1 bar is, a 1 bar is simply an inside bar. So in this example, it couldn't take out the previous candle's high or low. So its entire body is within the previous candle. So that's what we call a 1. It's an inside candle. I like to explain 3s next. So here, a 3, most traders know as an engulfing candle. So it takes out the high and the low of the previous candle. So this is an outside bar. So we call those 3s. And the funny thing about 3s is if you draw trend lines starting at the top of the 3 back and the bottom of the 3 back, this is a broadening formation on a smaller time frame. So that's an instance where people think that the algos are picking them off. But again, I'll show you some examples of that later on when I get to my charts. Okay, so we talked about a 1, an inside bar. We talked about a 3, which is an outside bar. So a 2 is everything else. So it's gonna break one side of the previous candle. So it's either gonna be, it's a directional candle.
Right.
For instance, this candle broke the bottom of the previous candle. So we call this a 2 down. This would be a 2 up because it broke the top of this previous candle. So the direction is up. And then what we do with this is if a reversal is going to happen, it's going to happen in one of these ways. So we use these for entries to get in. So let's just look at a rev strat real fast. So per the strat, and this is including wicks, I just didn't draw wicks on this chart when I made it. So it's the entire body, it's the entire price action of that range. Also, these setups work on any time frame. So this is not just like an hourly chart or a daily chart or a weekly chart, it's all of them. So that's how we use these little things to enter and exit. So for a rev strat, rev strats happen after consolidation, which is a 1, so it's a tightening range. And then the price tried to move to the downside, but it didn't go very far. So here, the bears couldn't push it very far. So then on the next candle, when it opens and breaks the high of this 2, we are going to enter here, and we have multiple targets. So target 1 would be the top of this bar, and target 2 would be the top of this bar. And also with the strat, it teaches you how to play bearish. And I feel like so many people don't know how to play bearish, and they're missing so many opportunities. And even if you can understand the bear side of things, even if you're a long-term investor or a swing investor, you're going to know when to get in. You're going to know when a reversal happens. So instead of like keep averaging down, 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 wouldn't you rather just save your money, play it somewhere else, and know when a reversal is going to happen? Right. And that's what we do. And we use multiple time frame analysis to know when reversals are happening. We use the smaller time frames to trigger the larger time frames, and we get this huge domino effect, which I'm also going to show you that when I get to my charts too. And it's really exciting and it's really cool stuff. And I think that that's also what technical analysis didn't teach me. Yes, it taught me about longer term trends and the trend is your friend, but it didn't teach me about using time frames and different participation groups to trigger them all. Because you have daily players, you have weekly players, you have monthly players, you have quarterly players. We want to use those players to our advantage.
Absolutely. And for everybody watching, I just want to be clear. I find a lot of value in this because I use it mostly on the daily time frame. I'm usually looking, probably if you watch my videos, you've heard me say 2 down, 2 up reversal. So that's kind of part of it. But I like to use it at the end of a proper basing pattern to find an entry where it's going to move to the upside very quickly. So even a 3-bar break to the upside is like a 2 down, 2 up that takes out multiple targets on the way up. And a lot of strong uptrends are going to be on a monthly chart or weekly chart, 2-2 continuations. If you look in the bottom left-hand corner here, they're going to be 2-2 continuations up and up and up and up. And so you can identify trends on higher timeframes. And then within those timeframes, as we'll get into, I'm sure we'll look for good setups and see how Sara trades it. So I think there's a lot of value in this, and it's a good way to, if you're beginning at this, to kind of quantify what a reversal looks like on different timeframes and know exactly when to get in. And if you use targets, when to take some profits on the way up. So I think this is really useful.
And that's the other thing about me is I'm sort of an impatient trader. So I don't hold things longer than I have to. And the Twitter world has kind of deemed me the queen of magnitude, and magnitude in the strat world means your target. So what's your target? What's your magnitude? So when I get into a trade, I know exactly where I'm getting in and exactly where I'm getting out. And that's where I get out. I don't care if the chart keeps going, right, because I'm never going to catch everything. But so on this example here, if I get in here, I'm out here, end of story. And then oftentimes you'll find price immediately starts to retreat. So You'll never go broke taking profit where you plan to take profit.
Sarah, would you mind going through maybe some of these setups that you use a lot, and kind of, yeah, just kind of tell us your favorite ones.
Yeah. So we're going to talk a lot about the weekly time frame, because I was always a very short-term intraday day trader. But I was like, I'm missing a lot of the bigger moves because I'm afraid to put my capital in and, you know, have this overnight risk. You know, what if there's bad news and the stock drops 20%? Like my account, I'm not one of these 6-7 figure traders, you know. So I'm like, I can't take a 20% drawdown. So the way that I find that I could combat that was through options, because my risk is capped. I can only lose what I spend on the contracts. And so that's how I sort of started incorporating swing trading. And by swing, I mean, I don't hold any more than 5 days. So my trades are based on the weekly time frame, and I expect them to play out within 1 week. So using options has helped me to be able to feel comfortable holding overnight. And also I post a weekly setup list pretty much every single weekend. And I posted one last weekend. I'm not sure when this will be aired, but everything's on Twitter. So I'm going to go through that and kind of what I was looking for and why. All right, so this is the weekly chart of QQQ. And I posted Saturday or Sunday, sometime this weekend. I said the market's tired, we're at all-time highs, we're at exhaustion risk. So our previous all-time high was here. And obviously we've been trading right around this range. So I was looking to the short side, and I had about 50 tickers that I had on my setup list to trade to the short side. So I had to cut it quite a bit. But I look for signals on the weekly time frame because honestly, the weekly time frame is a great time frame. I'm finding a lot of consistency in it. And the gains are a lot bigger, you know, than the daily. So the first thing I want to talk about and why I said that we're at exhaustion risk is because that was our previous high back in February. And then we have made a new high. Now, the thing is, anytime you're at all-time highs, you're at exhaustion risk, because who are you long against? Anyone who is short in using this pivot as their stop has gotten out. So these people are no longer there to have to cover and push the price up. So last week we had this red 2-up candle. So the entry was below last week's low, so 336.90. And like I said, we use multiple time frame analysis. So that was the target based on the weekly. And then if you go into the daily, this is where we find more of our targets. Trying to make it nice and big for you guys. So that was the weekly target. And then each pivot low or candles low is a target. So we hit that weekly target, we hit this daily target, we hit this higher low target. We haven't hit this target. Now, tomorrow, so today the Qs were an inside day. So tomorrow, what the Stratters would do, we're going to remove all the drawings. What the Stratters would do is we would short here on a break of today's low with a target of here. And that's how I said that the strat gives you clear entries and targets. So entry here, target here. And then we're going to go to, so these are the tickers that I had on my weekly setup list. So And inside bars are wonderful because it's a tightening range on a shorter time frame. So I said CGC inside bar, if we break last week's low, the target's here. So this trade was successful. Then we had HD. I've been trying to short HD, but I haven't actually tried because I know I have to break a previous week's low in order to short it. So last week we had an inside week. So I said, if we break the low of this inside week, we can short. If not, don't short it. And that's the thing with HD is people keep trying to short it and time the top, but they're only pushing it up higher. It's not time to short until we break a previous week's low. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 higher lows in a row. This price is not coming down until we can break a previous week's low. And it's not coming down this week. So don't try and short HD this week. NVDA, this was my favorite trade of the week. Okay, so NVDA on the week of 4/12 hit all-time highs. You also have this kind of broadening formation. So again, when we're at all-time highs, we're at exhaustion risk. There's no short sellers left. Everybody's gotten taken out when this pivot here broke with a new high here. Mm-hmm. So double inside weeks are even better because the range has tightened even more. So the entry was on a break of this inside week, 599. The target was 565. I bought the 565 puts. When 599 broke, they went 10x in 2 days, which was really nice.
And why did you have a bearish bias on this? Is it because of the overall market? Was it because of the closing range on that previous week?
Well, one, it was the overall market because both the SPYs and the Qs closed red. They are at all-time high exhaustion risk. And so is NVIDIA, you know, it was also up at all-time highs. Now, had this broken to the upside, so had it broke above 626, I would have still taken that long. Mm-hmm. And my target would have been the high of this candle and then the high of this candle. But it just so happened we had market weakness because, like I said, we were tired and at all-time highs. So when you're playing the weekly chart, you expect it to take no more than a week. So we play our time frames. So if I'm playing the hourly, I don't expect to be in the trade longer than an hour, mm-hmm. typically. BA, so everything was kind of the same. Okay, so BA, I wanted to talk in depth about because it's a really good example of using multiple time frame analysis. So my orange lines on the chart that you see here, I always mark the previous week's high and the previous week's low. So when we open, I know what last week's high and low were. My pink lines are last month's high and low. Okay, so BA, we had an inside week. So the short signal was here and a break below last week at 231.80, but let's go look at the daily. The daily gave us an early entry based on the Strat combo sheet. So one of the things on there is the Rev Strat that I was talking about, an inside bar, a 2 in one direction. So this is a 2 up, countered by a 2 in the other direction. So let me make this big. So when we broke 233.81, we triggered the daily players. When we hit this orange line, we triggered the inside week and down players. So we triggered the daily. Here we triggered the weekly. Then when we hit this pink line, we triggered the monthly traders. So we had 3 participation groups shorting this at the same time. Yes, it had a huge rebound, but still, we had to move from 233 to 225. And then on the daily time frame, if I don't have targets nearby, so the only target nearby was this pivot here, I use psychological levels. And you'll see with BA, I use increments of 250 because that's how the option chain works. So we had a psych target of 227.50, 225, and that was the daily pivot there. Mm-hmm. So we almost hit 225, but as soon as you got into the 225 range at all, that's a good time to take profit because we had really dumped. Mm-hmm. And we hit a low of 225.65. So that was a really, really nice example of using multiple time frame analysis. So we had the daily, weekly, and monthly all trigger at once, which is usually a recipe for a great trade.
Is that when there's the highest magnitude on the move, either to the upside or the downside?
It depends. Mm-hmm. It depends on the chart, really. I would have liked it to have gotten down to 222, but mm-hmm. But then again today, so we have another inside bar. So tomorrow, if we break today's low, that's going to be your target. And then I bet you this 222.58 level gets taken out, but we'll just have to see. And that was from the daily. That was from over here. Mm-hmm. And people call, these little higher low support. And what the strat has taught me is they're not support, they're my targets. So I'm going short. These are my targets. I'm trying to take these people out because we want to be trading against the people who are in losing positions. So I want to make you have to do something. So if you're long, say you're long BA and we break this week's low, you're going to have to stop out. Right. Because how long are you going to let it go against you? So we want people to be selling as well as strat triggers. So people are selling because of their stop losses, and then the bears are shorting. So it's kind of like a double whammy is how we use it. And it works to the long side too. The short side though, it's just always faster and harder. So as a day trader, I prefer to play bearish because the moves are faster and quicker and I make money a lot faster. Right. The bulls, it's a slow, they don't need any volume. It's just a slow climb all day. I like those fast dumps.
Right.
And everything was the same setup this week. So here's Airbnb. We had a 2 up last week. This week we opened, went 2 down, target 1 here, target 2 here. I mean, it doesn't get any more perfect. So the low here was 161.90. We hit 161.96. Like you can't make it up. Apps, same thing. We had a 2 up. This one was green. This confuses a lot of people. We don't care about color. We care about direction of the 2. So we had a 2 up countered by a 2 down reversal. So short here, target here. And you'll see I connected this low to this low, and that's exactly where we hit. And that's why support is not horizontal. So if you had to stop here, you would have been stopped out on this candle only for it to reverse, what, $10?
Right.
Same with this candle. If you had to stop here, you would have got taken out on this one. Now, who knows if we're going to go back up, but price works that way over time. They're more, support's more diagonal than horizontal. So BABA, same thing, short last week's low, target here. Blink didn't quite complete, but it was a 10% move, so could have took some healthy profits along the way. CHWY, 2 up, 2 down, entry here, target here, second target here. We hit both of those because we also triggered the monthly on this. When we hit this pink line, that's the monthly. And when I say monthly, last month, this is the monthly chart of CHWY. We had an inside month. So we triggered the inside month and down players. And then if you're using the monthly time frame, you're just going to use the low of this month and then the low of that month as your targets. So this, like I say, this works on any time frame. It's just whatever time frame you prefer to play on.
Right.
PDD is taking its time. That one didn't work. Tesla was another example of using multiple time frames to trigger another. So this is the daily chart. On Friday, we had an outside bar, then we had an inside bar. So we shorted here. Target 1 was here. Target 2 was here. Perfection. We hit all the targets.
And where's that pink line from?
That's last month's low.
Gotcha.
So my pink lines are my monthly high and low. Now on the monthly chart, the goal is to short here and take this out, but you would have to use the shorter term timeframes to confirm those.
Right.
So you would want like an inside bar next week, and then you could short it again, and then this would be my target, this 591, and then that, and then that. Okay, a lot of people ask about stops. So let's go to NVDA. Okay, so first we're looking at the weekly chart. So the 2x inside week and down break. So let's go to the daily time frame. So the entry, we know from the weekly time frame, was at this 599 level. So you short here. Okay, if you're only using the daily time frame, I would just put my stop at the previous day's high. Once you've broken through 599 and you're in profit, move your stop to break even. So our goal as stratters is to put us in winning positions immediately and then put your stop at break even immediately. So we don't accept red. We don't let trades go against us, because if it does, we were wrong. We expect them to work right away. If they don't, we are gone. If they do, we're at break even. We have nothing to worry about. Then you can even go down to the hourly time frame. So 599, we broke. You have a lower high here. So you could have put your stop here at 609. That was, yeah, 609.31 was the high of this candle. So put your stop here initially. So the trigger was 599, original stop here. Then price goes down. We have an inside bar. You have some corrective activity. The strat doesn't use the word bear flags, but I know most traders know that this is a bear flag.
Right.
And most traders don't know what the strat is. So I will tell people like it's a bear flag. Once you get a 2 up and it starts coming back through this candle, that's bearish. So now your stop should be at this 599 level because we want it to be at break even. Now, once you've had some corrective activity, your stop's going to go here. It's going to go at the next lower high. So if you look, you have high, a lower 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 high. This is a downward trend. So stop here, and still our target is here. And where I got that target, so I know it shows it on the weekly time frame, but it also shows it on the daily. You had this huge green candle this one day, and it was an outside day. So that's the target shown on the daily time frame. So yeah, so your stop would have been up here at 597. So still you're $2 in profit from your entry. So your stop is $2 in profit, but you know that your target is still down here. So once we hit our target, that's where I'm the queen of magnitude, I'm out. So my 565 puts, when I bought way up here, they were way out of the money, but now they're in the money. So I am gone. That was successful.
For a trade where you have multiple targets, how do you split up taking profits?
As long as you don't have a reversal against you, you're good to stay in. I tend to take, usually I don't have that many multiple targets, so I tend to take all my profit when my target gets hit.
Gotcha.
Like this example, this NVIDIA one, this one didn't have multiple targets. So also it's nice when you have a trade that doesn't have multiple targets and then you just know where to exit all of it.
Right.
Because then today, so we hit 565, but today we gapped up to 588, you know, that's $23.
Right.
So that's why I take my profit where I plan to.
And going back a little bit to the stop loss, do you wait for one candle to develop fully before you move your stop loss to break even, or as soon as you're in profit, you move your stop to break even?
As soon as I'm comfortably in profit, I will move it to break even. Because you don't want to move it as soon as price gets to your break even, because of course it's going to move around a little bit.
Yeah.
And the other thing we do, and it's still using multiple time frame analysis. I don't know if this is a good example or not. Let's see. No, let's go to QQQ today. Okay, so QQQ hourly, we had a rev strat. We had an inside bar. We had a failed 2 up because it didn't go anywhere. So when you have a 2-1-2 pattern, the goal is to enter here and that be your target, but that did not happen. This candle went nowhere. So you would have immediately cut it because it barely broke and fell back down. So now we're looking short because our long didn't work and we are red on the day. We're an inside candle, but we're red. So we are lower than the open. So the play here is to short here. At first, your stop can be the top of the trigger candle. So people, you know, you can't short until this candle opens. So that last hour, this was the range. So when this hour opens, we're going to short when we break this low. And your target would be here and here. We didn't quite tick that. So this was 328.15 and QQQ hit a low of 328.23. So 8 cents.
Yeah.
And then we know what reversals look like. So you're short from here. As long as you have consecutive lower highs, you have no reversal against you. So you're still good.
Mm-hmm.
And then if you wanted to, you can go down to the 15-minute time frame and you can walk your stops down on that instead.
And Sarah, could you talk about kind of what time frames you use to execute your trades, or are you really focused on a couple different ones?
Well, I'm focused on them as a whole. So a lot of times if I'm using the weekly time frame for a trade setup, I will typically go one time frame lower, so the daily, and hope that that triggers my weekly. So we sort of talked about that with BA. So BA, we had this inside week. So I know that I want to be short if we go below 231.80. And that's what's so great about the strat is it teaches you how to use smaller time frames to trigger the larger time frames. So I always kind of go one time frame below if I'm trying to enter a trade. So if I'm using the hourly time frame, I will be using the 30-minute signals as early entries, hoping that that triggers my hourly time frame. And like 90% of the time it does. Let's talk about FUTU. FUTU on the weekly was interesting a couple of weeks back. I had it on my weekly watch list set up because we had double inside weekly bars. Also, when I post my weekly setups, you'll see a target of a certain level, and that's usually the options that I'm playing because my target, my strike is based on my target. So we had a double inside week right here, and FUTU probably frustrated a lot of people what they did overnight and having that offering, and then the price tanked and yada yada. So people were probably mad at it. So the entry on FUTU was 158.84. And then these, so this is kind of a pivot machine gun. It's what we call a pivot machine gun. It's multiple consecutive lower highs. So every one of these lines is our target. And these horizontal lines are all clumped together nice and tight. And then you have this big gap from this one to this one. So again, that's where we can go into the daily time frame and look for other levels. So the only other level I see is the high of this day. So it's getting pretty liney, but
but those are all your pivots.
These are all our pivots. And this is how we use pivots, which are people's stops, and they have to buy to cover, which helps to blast the price up.
Right.
So let's make the weekly signal is this orange line. And then these were all of our weekly pivots. We found an extra one on the daily. So, and then this is a great example of using multiple time frame analysis. We had an inside day here. So the early entry, let's make this purple. So the inside day and up entry was at 154.60. And we take this hoping it's going to trigger the 2x inside week and up, which again, my weeklies are orange. So it did. And then it took this pivot out, this pivot, this pivot, this pivot, this pivot. So my target, I had a pretty modest target. Mine was 170 and we hit 178. So I was all out when it hit 170 because I take my trade. I'm in at 154, I'm out at 170. I don't care, it went another $8. And then they had the offering overnight. And then I said, hey, this is gonna go outside week to the downside. And let's look at what that looks like. All right. So we have our previous week's high and low marked in purple. Then we go to the daily. So there's our lines, our last week's high and low in purple. So per the strat, this is a reversal. It's a 2 up countered by a 2 down. So we would have shorted here with the hopes of becoming an outside week. So we would have shorted at 152 with a target of, what is this, 141.80, and we got that. And then you had this was a target, this was a target. And you can see, so we became an outside week when we hit that purple line here. Then we took out this target, which is this pivot. And we also took out this target, which is just the low of day for this particular day. So all in all, your entry was 152.62 to 136. So it was a great long that one day, and then it was a great short the next day, which is why I tell people they need to learn how to play short, because if not, you're missing so much.
And Sarah, how does volume come into play with the strat? Because definitely my style of trading, we look at volume to basically gauge whether institutions are involved on a particular bar, but does that matter at all with the strat?
So as far as trading, I don't really pay that much attention to volume. I used to, but as far as my go-to watch list, I just want to make sure that they are liquid names. So on my watch list, I pretty much only have names that trade over 1 million in volume per week. But other than that, like on the hourly time frame or 5 minute, I really don't pay any attention to volume. I do still have it on my charts. I do like to see it. I know in DraftKings a while back, I noted some crazy volume. I don't even know when it was. I guess it was that day. And I said, like, that's really unusual volume. But it turned out they did like a share release or whatever.
Right.
Like the shares were unlocking. But that pretty much marked the near-term top. So I do still look at it and take it into account, but I don't know, it doesn't really affect my day trading decision making in any way.
Gotcha. And speaking of your go-to list, how do you come up with that list, and how does a stock make it from that list to a name that you're going to trade during the week?
Well, I feel like these are all pretty popular names. They're very liquid. They're, you know, like Dollar Tree. I have a little bit of everything. I have some banks, tech. I don't have much energy. I kind of find those names boring. Some names I find boring and I just don't trade. Some are hype names. Actually, I need to add that Playboy one.
Yep.
Because that thing's been insane. And also, so this is just my universe. So I try to keep my tickers at 70 tops, and I go through these weekly. If it gets to be more than 70, it's too overwhelming. And honestly, 70 is probably too many. I probably need to weed it down just a little bit, probably to like 50 or so. But yeah, because I know that they're liquid. I know that they all have options. The options are tight. That's a big deal. I won't play super spready options. In fact, I noticed NVDA's options are pretty spready. But when you're playing so far out of the money, it's not too big of a deal. But
and to make it from this list to something you're looking at for the week, you just look for those setups, the different strat setups, the time frame continuity, all of that comes together.
Yep. So yeah, so what I look for is my little 70 ticker list. I will look for inside bars on the weekly, and I will, you know, put them on the inside week list for a short there and my targets there. I also really like 2-2 reversals, whether they are bearish or bullish. So that's literally all I do. And I write them down. And then I go through the list. If they have earnings this coming week, I remove them from my list. So that's another way that I kind of narrow it down. I won't take a 1 week trade with a name that has earnings. because we all know how that can go. It can be great, you know, earnings, great forward outlook, and then it just tanks. So that's one of my rules is I don't trade earnings. Rev strats, love rev strats. So I look for those, and that's all I do. And then I go and I set alerts, and when they trigger, I already know what my target is and what my strike is. And I already know how much they cost because of weekend homework. So I already have my risk defined and I know what I'm doing when it happens. Because sometimes I have 10 to 20 names on my list and I can't manage all those things on the fly. So you have to do your homework. You have to know how much you're risking, what your target is, what you're going to do when your price triggers. And that's it. You go by your plan and you get out when you say you're going to get out, when you hit your target.
Right. And in terms of your daily routine, is there, apart from just like looking around at the alerts, is there anything else you do specifically during the day to make sure you're on top of potential setups?
Well, so every night when the market closes, I will go through my watch list and I find my setups for the following day. So all based on this sheet as well. So if I get, you know, if I have a 2 down and we have full time frame continuity to the upside, meaning the weekly is green, it's just a fancy strat way of saying the trend is your friend.
Right.
So the monthly's green, the weekly's green, you know, say the daily was red, but if we break yesterday's high, the daily is going to be green. So I'll go through that list. I typically only pick about 5 names. I throw them on my watch list on Thinkorswim. And then pre-market, I will come and see if any of the setups have been negated, meaning they gapped way above, because I won't play gaps. So if my goal was to enter above yesterday's high and we open up here, I'm no longer interested in this name, so I'll just remove it from my list. Also at night when I'm doing this, I set my alerts, so I don't have to do it in the morning, but when I remove names from my watch list, I'll also remove the alerts, just so I don't get a bunch of unnecessary alerts, because that can be, you know, kind of overwhelming. You're getting like 10 different alerts and you're like, wow, what's going on?
Right.
So that's why also I only try to limit my day trading names to no more than 5. I am not a good multitasker as far as being in multiple trades at one time. I need to focus. I need to focus all my attention on 1 to 2 names at a time. I'm just not that skilled to where I can trade 5 tickers at once.
And what portion of your entire portfolio are you investing in any one name? Is there a limit or a rule of thumb? How do you do it?
It's basically based on risk. I don't really use a percentage of my account. My size depends on the chart setup, where my stop's going to be, and how much I'm willing to risk initially. So it's not really a percentage. Percentages, to me, don't work because I'm so based and focused on the chart setups. So say, I mean, it depends on the price of the stock.
Right.
It depends if I'm playing options. If I'm playing options, I might go a little heavier because it's not as much capital up front, but still my stop's going to be, so if I were to enter here, my stop would be here. But once we start coming down, my stop always goes to break even.
Gotcha.
Because it's honestly the best feeling in the world. You know you're not going to lose any money. And if you're right, you're going to make money.
Right. And what about a 2-bar that it's a 2-bar up, but it closes back within the previous bar's range? How do you interpret that? Because it's kind of a conflict. It's a 2-bar up, but you're closing back towards the previous bar.
Here is a good example on 421. You had a 2 down. So the entry was there, target 1 there, target 2 there, and it hit it. Do you see how that?
Yep. So you never take continuation moves. It's always got to be a reversal. That's interesting.
Never. Yes. So, and then 2, when it gaps up, when I talk about gaps negating my plays, you also have to remember, like the common stock market saying, gap ups are for selling and gap downs are for buying. And that's, I don't want to say always true because it's not, but it's most of the time is true. If you get a huge gap up and people wake up to profit, like a whole bunch of profit, they're going to take it. So that's going to bring the price down. And if you have a 2 up in the strat, but it begins to turn red, that is conflict. So we know that we would be red on the day. So we want to be looking for short signals during the day because the 2 up did not work. So it's failing. And then if you look, you had a 2 up, and then the next day you had a 2 down. So hold on, we got too many lines. So the entry would be here and your target would be here. And you see how one, or no, that's a bad example. It's a gap as well. Because we closed here and then we opened here. But say price had opened within the range of the previous day, that's only when you want to take them. You don't want to take them on gaps because it gapped down, went down, and then they started buying the dip. So that's why gaps negate strat trades. We want the price to trigger through our price. So for this particular instance, we want the price to break through 219.89. Because people have stops here, right? They have stops at lows of day. So if they have a bunch of stops here, we're going to trigger the shorts and then bears are going to hop in. So that's how we get from here to here.
And as a day trader, do you have hotkeys set for buys and sells? How does that work? Or do you have to type in the orders or you have them prepped before, right when it's nearing that level?
So, well, apparently I have hotkeys.
Yeah, you were telling me earlier.
Didn't know I did. But no, I have my Thinkorswim template set up. So it's pretty fast. So I've got like my option quantities set up. I have, buy at the ask. All I have to do is click one button and I'm in. So it might as well be a hotkey.
Gotcha. And Sarah, kind of outside of technical analysis, do you think there's anything really important that people need to know and understand in order to become a good trader?
So when I learned technical analysis and then I learned the strat, the one thing that neither of those taught me was trader psychology. So, paper trading is good and great and all, but it does not prepare you for how you're really going to feel when you're in the trade and your real money is on the line. So there's a book, there's an audio book from Mark Douglas, Trading in the Zone. I know you know it. He really breaks it down in a good way. We have to take shots. We have to put ourselves in probable situations, most likely situations, but we have to take shots. We have to accept the risk. Trading is for sure the hardest part, or the psychology of trading is for sure the hardest part. I grew my paper trading account like 20x, it was easy because it wasn't my money. I didn't care. And then I thought, why can't I, do it that fast on my account? And that's why. So you have to have your mental state's got to be right. If you're stressed out dealing with, family issues or whatever, take time off. Don't trade while you're stressed. Don't expect to be rich overnight. It's a bunch of small little base hits that add up. They build your confidence.
Right.
Confidence is everything. Passion is everything. If you're trading because you want to get rich, you're going to get burnt out super fast. This has to be everything you think about, dream about. It's what you do in your spare time. You know, I call myself a chart nerd because I love them.
Mm-hmm.
Um, sizing is an issue. If you're too big, you're going to be overly emotional. You're not going to be able to control your thought process. You're going to have too much money on the line. That was a mistake that I made very early on. I was way too heavy in AMD, which again is my arch nemesis and still why I won't trade it. I'll chart it and talk about it, but I won't trade it. And that's okay. You know, we can trade whatever we want. You know, I know a lot of people that have do not trade lists. If you're not comfortable with a name, don't trade it.
Right. So Sarah, what advice do you have for new traders who really want to get interested in the strat or want to learn your methods? How can they start out and shorten their learning curves?
So if you want to follow me on Twitter at Trade Sniper Sarah, I have a pinned tweet full of information. And so the thing about it, we give away the education for free. Rob does have a service, but it's not required for you to join. You need to know how to trade the strat, and that's what we teach. I have a YouTube channel, Sara Strat Queen, and we're a huge community on Twitter. There's a whole bunch of us. We do Follow Fridays. We all share our chart examples. We're more about teaching than flaunting our P&Ls because P&Ls don't help you. They didn't help me. They just made me feel like, well, why can't I make 5 figures in a day? You know, so we're totally focused on education, teaching you guys how to do it. So yeah, if you are interested in learning, come follow me, hit me up. We'll get you connected. If you are a swing trader, I can hook you up with some swing traders. If you're a day trader, we can, you know, there's all types in the strat. There's also a Facebook group. It's just the Strat Facebook group. That's free as well. Yeah, I think that's how they can do it.
Perfect. And Sarah, thanks so much for coming on and sharing what you've learned about the strat. We really appreciate it. And yeah, for everybody watching, I hope you guys enjoyed it. Definitely go ahead and check out Sarah. Her links will be down below in the description. If you liked the video, go ahead and leave a like down below and subscribe if you are new. And yeah, thanks again, Sarah.
Thank you for having me. It was fun.
Yeah, of course. And we'll see you guys in future videos.